And if my sister had a she'd be my brother. All right, Stacey Herbert, thanks for being on the Keiser Report.
Thank you, Max.
Stay tuned for the second half. I'll be speaking with Goldbug and author Dominic Frisby. Yes, that's his actual name. Welcome back to the Keiser Report. I'm Max Keiser. Time now to turn to Dominic Frisby, resident Goldbug at Money Week and author of the new book, Life After the State. Dominic, welcome to the Keiser Report.
Thank you very much, Max. Pleasure to be back.
All right, Dominic Frisby, we're talking about Germany. Now, how significant is the German court order demanding that the Bundesbank audit Germany's gold holdings?
Well, we don't know how significant it is because we don't know if the gold holdings will actually be audited. But the big suspicion is that there is a double entry on that gold, that the gold has been leased out to somebody else. And we will never know the truth.
But Dominic, isn't that suspicion warranted given this recent history of the MF Global scandal, where collateral was rehypothecated, where the whole derivatives market, where we find that collateral is being loaned out hundreds of times again? Why not? Why wouldn't Germany's gold be loaned out a few times?
Well, exactly. Why wouldn't it? And it would be no surprise if it is. You know, that gold has never been properly audited. That's what's so amazing about this revelation. It has never been audited. And then you go one stage further, and then you think the American gold, despite repeated claims, now America is of course the world's biggest gold holder with 260 million ounces. That gold hasn't been audited in over 50 years. And every time attempts have been made to audit it, what always happens is we'll give you a little bit, and you can audit that.
That's what they're saying this time?
Yeah, absolutely. And, you know, that's a hell of a lot of gold. 100 million ounces, or in the case of America, 260 million ounces. That would take a heck of a lot of auditing. But given the importance of those gold reserves, you just think it would happen. And all we have at the moment is the assurances of central bankers, which are, to coin a phrase, only worth the paper that they're written on.
Right. Now, the gold is becoming hugely important now because there's two flights of quality going on in the world today. People who are frightened by this financial collapse and the geopolitical unrest, they're moving either into bonds, and they're also moving to some degree into gold. Now, bonds are trading at a close to 250-year high.
Bonds, the government bonds, is the mother of all bubbles, and there's so much money waiting on the sidelines, waiting to pile into a short on government bonds. When that one goes belly up, you know, that's properly, you know, run to the hills, take your tins, take your guns, and put your crash helmet on.
Right, and meantime, the central banks themselves are buying gold. The same banks are issuing all these bonds. Even though there's a record supply of bonds, the bonds are still hitting highs.
Yeah.
Whereas gold is a limited supply, and we've seen a bull market certainly, but it hasn't really reflected the collapse of the bond market.
Well, if you look at the ratio of gold to government debt or to government balance sheets, gold hasn't been in a bull market at all. It's been totally flat. It's, I mean, obviously it's risen in currency terms, but the ratio of gold to government debt is flat.
Right, so as the gold price has been moving up, governments have been issuing more debt.
Yeah.
So, in fact, you could say the bull market in gold relative to the bond market hasn't really even started yet.
You certainly could say that.
And historically, we know that bull markets go in phases, and we're at maybe a phase one is finished, where there's been accumulation.
If you have three phases to a bull market, the stealth phase, the awareness phase, and the blow-off stage, I would say we are midway through stage two.
So you're in front of people as a performer, as a writer. You know, you're a Renaissance man, Dominic. So what about the people? You say it's not a secret, but then again, less than 2% of investable assets.
Listen,
around
I
the
went
world.
to a conference last week. Bill Bonner and Mark Farber both spoke at the conference, the Halkin conference. You know, it was full of hardcore Austrian economists, sound money bugs, libertarians, those kind of people. Maybe 150, 200. Mark Farber said to the audience, who here owns gold? And I would say 3/4 of the audience put their hands up. And then the chair, Bob Cato, turned around and said, okay, who has more than 5% of their net worth in gold, excluding ETFs? And only 20% of the room put their hands up. And that was, maybe even less than 20%, and that is hardcore gold bugs. That isn't Joe Public. And so, gold, physical gold, is still under-owned.
Okay, so to explain ETF, exchange traded fund, it's a proxy for gold. Tracks the price of gold. Some would argue that it's paper gold, and in some cases, like the one with the GLD ticker symbol in New York, it's not really gold at all. Whereas the ones in Canada or Eric Sprott's has an ETF, which is the physical bullion, so one must be aware of what's going on. But your point is well taken, that even amongst the hardcore professionals, the ownership at more than 5% of the actual stuff, not the paper stuff, is low. Now, spread across the entire economy and global investors.
Can I interrupt you just for 1 second?
Please do, yes.
Let's say that Germany's gold isn't there.
Yes.
Then suddenly, and then that it's been leased out to someone else. The implications of that are because suddenly Germany, the second biggest economy or third biggest economy on the planet, doesn't have gold. What value then does its currency have? The implications, and then what happens relations between Germany and the US?
I think what you're alluding to here is the old animosities between Germany, the rest of Europe, America seem to be increasing around a theme some call World War III, the currency war. Your thoughts?
I don't think there's going to be a war between Germany and America, but, economic crises usually end in a war of some kind. And the big issue is it going to be between China and the States? Is it going to be between the Muslim world and it could be any...
Yeah, but what if the Treasury here in the UK, when Germany comes for their gold, gives them instead a bunch of gilts? Or IOU and say, well, we don't have the gold, but here's some bonds.
Well,
Germany, they're not wimps.
Well, I imagine the reaction of central banks in that case would be immediately to take those gilts, sell them, and buy gold on in the market. But that's going to dramatically push the gold price up.
Right,
it's interesting, by the way, the gilts actually means gold.
Yeah. Interesting, ironic, tragic. Yeah. You be the judge. All right, so another big player in the gold market is China. They have, ostensibly, according to the latest reports, 1,000 tons or so. They built that up from 500 tons in a pretty rapid amount of time. They're also the biggest miner of gold. They keep all the mine domestically. Rumor is, maybe you heard some inside scoop on this, that they're out there around the world secretly hoarding gold, and to make another surprise announcement soon that they've taken that 1,000-ton position to 2 or even higher 1,000 tons. What do you hear?
Well, it's certainly... China is the world's biggest gold producer. I had dinner about a year or two ago with the head of gold at HSBC, and one of the things that he described, and most of the world's gold goes through HSBC at some stage, and one of the things he described looking at the gold in his vaults is despite the fact that China is the biggest producer, he never sees bars with Chinese stamps on it. In other words, China is hoarding all their own gold. They do not export any of it. And, the implications of that, every few years China makes an announcement about how much gold it has, and I think the next time they make that announcement is going to be considerably higher than the amount they have now. I also hearing rumours about African Barrick having trouble with their mines in Africa, and the Chinese making plays on African Barrick, huge gold producer.
Oh, so American Barrick's African subsidiary. I would imagine. African
Barrick Gold spun out its African assets into a separate company, which is African Barrick.
Okay, it's either Canadian or American Barrick.
Canadian.
It's Canadian, okay.
Yeah.
So, this is an interesting situation because you have, as I said at the top of the interview, people who are frightened by the geopolitics of our era, who are frightened by the financial crisis, are running to two places, bonds and to some degree gold. But these are two diametrically opposite investments in a lot of ways.
They are.
So somebody's going to be the huge loser and somebody's going to be an enormous winner. I think we can clearly see. Why is it our people so, they assume that bonds, let me ask you this question, they assume that bonds are safe. They don't understand that bonds are as risky as anything else. Why did you write for Money Week? Money Week is kind of, it goes to the mid-market, right? It's not meant to the professional.
Well, it's pretty contrary, but yeah, it is aimed at it's aimed at people who have money but don't necessarily work in finance.
Okay, so these people, even of that caliber of sophistication, which is above the average,
yeah,
they still don't get this idea, for the most part, that bonds are as risky as anything else, given fluctuations in interest rates?
Well, I mean, you know, the good thing about Money Week is it does try to put all the different points of view across, and there are some writers who write for Money Week, James Ferguson, who's been very pro-government bonds, and there are other writers, myself included, who have said avoid them. Now, up to now, James Ferguson's call's been right and mine's been wrong, but I still maintain that when this bond market, I think it's an artificial market. Central banks are printing money to buy their own government bonds. The UK, the Bank of England makes up now something like 50% of the buyers of UK bonds. Now, that's an artificial market. The Bank of England has become the market. And if there was an actual genuine market for government bonds, then yields would be considerably higher. And but this artificial market has created a situation where governments don't have to make the cuts that they have to make, instead, because they're able to sell their debt cheap. So governments have continue to expand when they should be cutting, and the market can stay irrational a lot longer than you can stay solvent, to misquote Keynes. But the point is, when this goes, I just think, you know, hide.
Dominic Frisby, you've also written a book. Tell us about it.
Yes, I have got a book out. I'm funding it with a new publisher called Unbound. It's a book calling very much for change. I try to explain the economic crisis and the drivers of the economic crisis, but I've found alternative explanations. I place the entire blame for this economic crisis and the bloated financial sector and the bloated government sector. I see it as entirely a consequence of our flawed system of money. And so I try and explain the economic crisis in these terms. I'm trying to do what Malcolm Gladwell, who wrote Outliers, did for his subjects. I'm trying to do a similar thing about economics and about this financial crisis. And and I offer solutions. Now, I should say, another book explaining the economic crisis, oh no. But my background is as a comedian. And when you're on stage as a comic, if you say things that people don't understand, they don't laugh. So it makes you obsessed with clarity. And one of the problems I think the financial sector as a whole has is this use of language that people just don't understand. And so I've taken great pains to write this in a totally comprehensible way. And, you know, every time I write something for Money Week, I try and write something that I think even my mother would understand. She's my kind of target, if you like. So one of the great efforts of this book has been to put it all in a language that people can follow.
Isn't your mom a bookmaker at Ladbrokes?
No, she's a gold bug.
Dominic Frisby, thanks so much for being on the Keiser Report.
My pleasure, Max. Thank you.
All right, and that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacey Herbert. I want to thank my guest, Dominic Frisby. If you want to send me an email, please do so at keiserreport@rttv.ru. Until next time, Max Keiser saying bye, y'all.